Consumer spending is an important part of the economy, of course, and especially so at this time of year. But in order to spend, Americans have to feel good about the economy. And as Steve Leisman reports, that may not be the case this year.
As Americans head to the malls this holiday shopping season, they're less optimistic on the economy than they were a year ago, and that could depress spending. The CNBC All-America Economic Survey finds just 22% of the public viewing the economy as improving. It's a 5-point drop from last year. And key economic indicators, including views on whether home prices will go up and whether wages will rise, they weakened at the start of the Christmas season. The poll of 800 Americans nationwide finds just 13% planning to spend more this year compared to last. On the plus side for consumers are lower inflation and gas prices. Only 59% of respondents said prices for everyday goods will go up next year. That's the second lowest percentage in the 9-year history of the survey. Data like that has some economists actually upbeat on the consumer this holiday season.
The dollar being stronger means that imported goods are a little bit cheaper. Price of gasoline being a little bit lower on a sustained basis also means that real incomes are going up as well. And what we see is the American consumer, particularly in services, a little more tourism, a little more travel involved. That's been very positive for the American consumer.
So it could be that more spending this year ends up in gifts for experiences like movie or concert tickets rather than retail gifts. 25% of respondents say they want to receive experience, but only about 5% of Americans are giving them. The survey also found some evidence that online traffic could be peaking. 38% chose it as one of their top 2 places to shop, but that's the same percentage as last year. So the dollar amount spent online, it could still grow strongly, but not so much the number of online eyeballs. In contrast to views on the economy, attitudes towards the stock market have improved. 37% of respondents said this is a good time to invest. An equal percentage said it's a bad time. Last quarter, Americans were net negative on stocks by 13 points. For 90 Business Report, I'm Steve Leisman.